Hello and welcome to a new episode of the Gilbert Housing Market Update. Today, I want to give you some updates as to exactly what is going on with house values and inventory and interest rates, particularly if you live in Gilbert, Arizona. To give you an idea, if you already own a home, what's been going on with your home's value, and to give you an idea of what we probably expect to see moving forward. And if you don't own a home, to hopefully encourage you to get in and buy a house as soon as possible. And hopefully I'll be able to convince you of that throughout this episode. So right now, active on the market in Gilbert, total number of active listings is 281. And the total number of pending listings is 438. So we have, almost twice, not quite twice, but quite a few more homes under contract than what's available. So if you're driving around and you feel like you see a lot of signs in the yards, it's actually very, very low. 2/3 of the signs that you see are homes that are already under contract. There are 353 homes that have sold in the past 30 days, giving us a month supply of inventory number of 0.8, meaning if no new homes were to come on the market, let's just assume that we continue to sell another 353 homes in Gilbert over the next 30 days. Well, it would take 3 weeks and a couple of days for everything that's currently available to sell. And in order to reach a balanced market where home values would be stable, we typically would expect to see around a 4-month supply of inventory. And right now, again, we're at 0.8. So now the flip side of that coin is the inventory is rising. The total number of homes available in Gilbert today is higher than it was a month ago. And the month supply of inventory at 0.8, it was as low as 0.3. So the month supply of inventory has doubled, but it's still extremely, extremely low. And as you're going to see here in just a minute, we're still seeing home values rise. Despite the rising interest rates, unless you've been living under a rock, you probably know average interest rates, for a 30-year fixed rate mortgage, they were in the high 2s, low 3s around the beginning of the year. According to Freddie Mac's website, they're now at 5.3%, which they only update that once a week. I think it might even be closer to 5.5 now. So, rates are rising, pretty rapidly. But it's still a supply and demand issue. There's, yes, demand has fallen a little bit and supply has risen a little bit. But we've moved about an inch and we need to move a mile in order to reach a balanced market. So over the past 30 days, the cheapest property that sold in Gilbert was a 1-bedroom, 1-bathroom, 600 square foot condo that sold for $220,000. And the most expensive property to have sold in Gilbert over the past 30 days was $2.7 million, 6-bedroom, 5.5-bathroom, 6,400 square foot house on an acre. The average price of all the homes that sold in the past 30 days in Gilbert was $685,969. Now, that's just over the past 30 days. If I look at the 30 days prior to that, so March 15th through April 15th, the average price then has increased by $26,809. So the past 30 days compared to the previous 30 days, we've seen an increase in average sales price of almost $27,000, which is a 4% increase in just 1 month. So average prices, despite the rising rates, despite the lowering demand, despite the rising inventory, average prices have still increased by 4% in just 1 month. And compared to, and also the sold to list price ratio, looking at, what you're listing a home compared to what it's selling for over the past 30 days, was still 103%. So on average, homes are still selling for 3% above the asking price. And the average days on market is 18 days. Now, if we look at the same 30-day period a year ago, so instead of looking a month ago, we look a year ago, the average price was $538,354, giving us a year-over-year increase in home values of $147,615 or 27%. And the average sold to list price ratio a year ago was actually 104%. So you can see we were at 104%. Now we're only at 103%. So, oh my gosh, the sky is falling, right? And the average days on market a year ago was 16 days, and now it's 18 days. So days on market is also increasing. So in conclusion, again, you already know rates are rising, inventory is rising, but inventory normally rises this time of year because there's a huge surge of people who want to sell their home in the spring and summer, because it's previously been May and June have previously been the biggest months of the year for homes selling. So it's a huge time for people to put their home on the market, people who want to time the market and put it on at the perfect time. The downside is that because of the rising rates, instead of seeing a huge, we saw the normal huge surge of listings, we didn't see the huge surge in demand. Demand has probably fallen by about 8%. So we're seeing the huge surge of listings, and demand is falling slightly. And so that's causing, homes are not quite as competitive, and some stuff is sitting a little bit longer, and some homes are having to do some price reductions and things like that. But the lower end is still very, very competitive, and very, very pristine custom updated homes are also, we're still seeing very, very competitive. So we are expecting to see home values really level off. I seriously doubt we're going to see an increase of another 4% over the next 30 days. With the rising rates and with the market slowing down, we might only see home prices increase by 1 or 2% over the next couple of months. And over the next year, we'll probably see prices increase, maybe flatten out, worst case scenario, but best case scenario, or probably most likely scenario, over the next 12 months, home prices will probably increase somewhere in the range of 5 to 8% in Gilbert, would be my prediction, which is, we were at 27% over the last 12 months. So it's a huge drop, but inventory is still too low to where we're going to think, oh my gosh, home values are going to start plummeting. It's nothing like that. It's nothing like 2008. There is almost nothing available for sale. Not to mention that the average homeowner, now this is a United States stat, this isn't Gilbert specific, but the average loan to value for a US homeowner right now is about 35%. So people only owe, let's just say hypothetically, if the value of your house fell by 10%, no one wants that, and no one thinks that's going to happen. But if it did, you probably wouldn't walk away from it, right? Because you still have a huge amount of equity in the house. Not to mention that you have a normal 30, if you have a mortgage at all, you have a normal 30-year fixed rate mortgage. You don't have some, interest only balloon payment, negative amortization craziness that was going on back in 2008. So yeah, home values are going to stabilize. Will probably continue to rise, but at a much slower pace than what we've been seeing over the past couple of years. Anyway, I hope you found this information helpful. If you would like an update regarding the value of your home specifically, or of anyone who maybe would appreciate my analytical approach to the market and kind of numbers driven approach, I would absolutely love an opportunity to talk to you and meet with you and help you out. So thank you very much for watching, and I hope you have a great day.